on. Dan, are you there?
Yeah, I'm here. Thanks so much for having me.
Perfect, great. So, Dan, we're at the same time as you're going to do your presentation, we're running a poll on questions that people want to ask you because as much as we love your stuff and we love hearing about the direction of crypto, et cetera, I think we're in a little bit of a stage of uncertainty in the country. And a lot of people who are in the crypto space have kind of been saying, well, this is what we've been talking about, whether or not it's fork turning or crazy other stuff. But obviously, I was surprised this morning when I woke up, turned on the local news in Las Vegas, and heard that the FBI and the federal government is deploying troops to 50 different states for this Joe Biden thing. So hopefully we can get some color from you as well as the normal perspective on crypto. So feel free to start.
Well, Marty, thanks so much for having me again. And for those of the rest of you, I wanted to give Marty a bit of props for being so early on this. He first invited me to speak to you all in 2014. So he was 7 years ahead of his time. And blockchain, is getting going, but we're really at the beginning of maybe a 2-decade thing. And what I want to do in this presentation is throw out a bunch of perspectives on how you can get your head around what blockchain is, why it's an important, very asymmetric trade to have in one's portfolio. And I've found from my own experience and from other people that have gotten invested in this space, everyone comes at it from a very different perspective. Marty even threw out some of the government issues that are going on right now, which are pretty wild. So decentralized censor-proof currency has some advantages that people have been talking about for a long time, and I'm not sure even the most libertarian people knew would come into effect so soon. So the deck is a handful of slides on essentially what is decentralization, what are DeFi opportunities, and then the global macro impact, and then our funds. And then most of the time is just for questions. So it's going to be a bit of a kind of a speed through these ideas just to kind of prep your thoughts, and then happy to take questions. So in the first slide, it's just a really brief history of our firm. When I left Tiger Management in 2000, I founded Pantera, and we managed $1 billion of normal hedge funds. And then in 2013, we launched the first crypto fund in the US, and have since launched funds that allow LPs to get exposure to the whole spectrum, from very liquid things like Bitcoin and Ethereum all the way out to illiquid venture. I have two excellent partners. My co-CIO invented the first token on Ethereum, a project called Augur, Joey Krug, and then Paul Radataget and I have been partnered for 7 years. So the opportunity, my whole career has been looking for very asymmetric risk reward trades out there. And this is the most asymmetric I've ever seen. Bitcoin is not the first cryptocurrency. There was 30 years of cryptocurrencies. It's the first one that actually got all the pieces together and worked. Since then, we've had two other kind of layers on top of that. Ethereum is the first programmable money. So it's essentially taking the middleman out of things and allowing you to set up code that says if something happens, pay this guy, and if that doesn't happen, pay the other guy. And then the chief technology officer of Ethereum founded a blockchain called Polkadot, and that's kind of like the third evolution of this. It's 1,000 times faster and can interoperate between different protocols. Decentralized finance is really taking off right now. And the way to think about it is the internet changed everything else in our lives, right? It changed the way we communicate with people. It totally changed the way we buy things and do commerce. It didn't touch finance, right? Banks are basically the same as they were, when the Medici set them up in the 15th century. Credit cards are the same way Bank of America set up Visa in 1965. Western Union's been monopolist / oligopolist for 140 years. All those firms are pretty much the same. Decentralized finance is taking all those middlemen out of the system and letting code do it, letting cryptography do it. The next slide we are going to skip over because it has too much information for this, and then just go to the reality is DeFi is exploding. This is the amount of money locked up in decentralized finance applications. Much of it is lending, borrowing and lending. So if you think about the way the banking system works, you deposit all your money in a bank, they give you 0, and then they charge you 17% on your credit card, right? So there's a ton of money in between those two spreads. Decentralized finance is basically that. It's people that want yield, depositing their cryptocurrency and getting yield, say 6 or 8%. And people that need to borrow money because they think they can invest it at a higher rate are borrowing it for 7 or 8%. So it's really just taking the spreads out, and it's exploding it in value. So the technology's been going on for a while. The macro case is just off the charts. I've spent my entire life as a global macro trader, and I've traded all kinds of things that have happened around the world. But what's happening post this pandemic is just literally off the charts. Here's a graph of the amount of money the United States is printing, graphed monthly, and we are now printing in 1 month more money than in the entire first 2 centuries of our country's existence. The only thing I know about this pandemic is the unlimited printing of money will push up the price of things whose quantity can't be eased. So that's gold, real estate, even shares the S&P 500, right? Corporate earnings have gotten devastated by the economic impact of the virus. Corporate stock prices are up. That is only because there's tons of money sloshed around the system. And then things like Bitcoin and cryptocurrency, which actually benefit from the economic policies the pandemic's doing, have gone up in value. So here's a graph that's super important on why Bitcoin is going up. Is its money supply formula is fixed and known. Other paper currencies like the US dollar or the Japanese yen or the Brazilian real, if the government wants to print more of them, they just print more of them. And so their value keeps going down over time. It's a good example of that would be the British pound used to be convertible into a pound of sterling silver. It now takes 184 pounds to buy a pound of silver. On the previous slide, let's go back to that one more time. The important point is the price, the money supply formula for Bitcoin is that gold line at the top. It's fixed. There are 18 million Bitcoins in existence. They are slowly being issued, and in 100 years, they will be capped at 21 million Bitcoins. So the money supply formula is fixed and known, and you're not going to get money printed away. When you start printing money at a rapid rate, the value goes down. It's like anything. When you pump too much supply into a market, the value goes down. This is the United States dollar weighted against all of our trading partners and discounted for inflation. And you can see right after the pandemic started, there was kind of a knee-jerk so-called flight to quality where everyone wanted to buy the US dollar. But as soon as people figured out what the money printing situation in the United States would be, the dollar has started to fall. The next slide has a table you're all probably pretty familiar with. The bottom half, that's the performance of normal asset classes or old school asset classes. Things like oil and commodities are all down because of the economic impact of the virus. However, things that are benefiting from the excess money supply, like gold, are going up in price. And then the cryptocurrencies, which are very much coming of their own in this crisis, are up hundreds of percent. And this is a good example that, Bitcoin's famous. It was up 300% last year, which is amazing. But Ethereum, the second most valuable cryptocurrency, was up 50% more than that. So it's important to have a portfolio of those assets. All right, so market perspective, why is this all happening? Big one is corporate balance sheets are now adding Bitcoin. So you have a couple of companies like MassMutual and Square that are buying Bitcoin. The darling of the markets right now is Microstrategy, which is issuing subordinated debt to buy Bitcoin on their balance sheet. Morgan Stanley now owns 10% of MicroStrategy. So it's just kind of this confluence of everyone is trying to get through a very small funnel to acquire Bitcoin. You have legendary macro investors like Stan Druckenmiller, Paul Jones, Bill Miller, all buying Bitcoin. Most of them are saying it reminds them of gold in the 70s. And I think that's a great analog that, in the 70s, we broke from the gold standard and started printing unlimited amounts of paper money, and the value of gold shot up, or the other way to say it's the value of paper money crashed. So the biggest one, though, is PayPal. It's now allowing its 300 million users to buy Bitcoin. They're doing it at a rapid rate. This is a graph of the exchange that PayPal trades through called ItBit. You can see that for most of last year, it was very low and steady, that white line. And then the day PayPal went live, it started exploding up. And now PayPal alone is buying more than 100% of the entire supply of newly issued Bitcoin. So you have one company buying more than 100% of all the Bitcoins that are issued, and then you have a bunch of other companies each buying a similar amount. And I have a Tiger Cub TMT friend that's said, hey, we don't trade Bitcoin because there's no cash flows to discount. There's no cash flows to the euro either, but people trade the euro and they don't think anything of it. It's just supply and demand. And here's a stylized view of the Bitcoin supply and demand curves. And the way I think about it is the supply curve is very, very steep. Obviously, there are a lot of people that hold Bitcoin for almost political philosophy reasons. They're doing it because they want to have less government influence in the world. And so it takes very, very high prices to induce those people to ever sell. And then every 4 years, the number of Bitcoin that are issued is cut in half. That happened on May 12th of this year. And so that essentially moved the supply curve way to the left. The demand curve is, I would say, very price insensitive. People pile into Bitcoin essentially regardless of the price. And so it's relatively flat. And then every time you add some new shock, like PayPal opening it up to 300 million people, you're shifting the demand curve up. The result is the price goes up a ton. And that's basically the way you should think about it. Here's another kind of visualization of it is Bitcoin has value because people want to use it. Some people want to use it as a means of storing wealth. We were just talking about the underbanked in the previous panel. If you're living in a country with no banks or terrible banks and your currency is depreciating, and then there was a good mention of sometimes within a family that, the spouses aren't equally good at saving money. And so if you want to save your wealth, a really good way to do it in the old days was buying gold because you could hide it or bury it. But Bitcoin's even better than that because all you need is a smartphone to be able to buy Bitcoin. So this is a graph of the log of the price. So an exponential price graph on the y-axis on the left. And on the bottom is just the number of people using it. Originally, there was just a few thousand people using Bitcoin. In 2013, there was probably 300,000 people using it. Now there's 100 million people using it. And I can imagine a world where 3 or 4 years from now, a billion people are using it. And if you take 21 million units of something and you go from 100 million people to using it to a billion people using it, the price has to go up. So I think that's a way to look at it. So everyone in the press, all the TV shows are wanting myself and my peers to be on to talk about this really surprising rally in Bitcoin. It's not surprising. We actually forecasted in our April investor letter. Every time you cut the supply of Bitcoin in half, it goes up a ton. This is the third time it's happened, and we used the previous 2 times to extrapolate what would happen this time. Obviously, the first halving had a really big impact on price. We were cutting out 15% of the stock of Bitcoin in the supply. The next halving was obviously half as big, and there was a bit more stock out there, so it was about a third as big impact. And this one, again, is about a third as big as the last one. All that together, we made a forecast that by the end of this year, Bitcoin would go from 8,900 to 15,000. Obviously sounded ludicrous when we made that forecast. It sounded equally ludicrous when Marty invited me the first time and the price of Bitcoin was 200 and we were forecasting 5,000. I think it's a pretty good chance it's going to do it. We're right on pace right now to have it happen again. All right, so the next slide is the thing that I'll have to keep in mind. Bitcoin is a very volatile asset, very volatile asset class. It's basically a brand new asset class. 10 or 20 years from now, it's going to be really boring. It's going to have volatility just the same as you see in most other asset classes. But right now, it's still very volatile. There have been 5 massive booms and busts in the time that I've been trading it. The booms, go up, orders of magnitude, and the busts have been down 61% to down 93%. That means if you're going to put this in your portfolio, and you really should because it has a 213% compound annual growth rate and 0 correlation to any other asset. So you really need some of this in your portfolio. But the punchline is you got to put less than your normal bite size. You got to put a much smaller chunk because this is very high octane stuff. But having looked at this and seen there's 5 massive bear markets, like things going down 83%, 83%, 69%, 93%. On the next slide, here's the lows for the year. even with those crazy bear markets, Bitcoin has only had 1 year where it's had a lower low. And that's really the thing to get your head around, or in family offices, the principal, or, for institutional investors, the investment committee is, although it's just crazy volatile, most of the volatility is on the upside rather than the downside. All right, so if you take the previous graph and you subtract out where we are today versus where the log regression would have us be, it's the next slide. And this shows the deviation away from trend growth or fair value, whatever you want to call it. And we're still actually below that. So even though the markets have rallied a ton and it's on TV all the time now, everybody's super excited about the rally, we are still way below where the trend would be. And then obviously there was a bubble in 2013. There was a bubble in 2017. Those are times where the price got way ahead of where it ultimately should have been. And I just want to give you a sense of how we help LPs get exposure to the space. On the next slide, we have our three main funds. We have a fund that invests in these initial coin offerings prior to them going public. So it's kind of like a pre-IPO fund for tokens. We have a fund that invests in just Bitcoin itself. It's like an ETF, but it's a daily liquidity fund to allow people to get invested before the SEC has approved ETFs. And then we have a fund that trades the liquid tokens, the digital asset fund. And we just have one slide on each of the funds that I'll share with you after the presentation, just to help you all figure it out. Our digital asset fund trades all the different liquid tokens, like Bitcoin, Ethereum, Polkadot, all those things, just like a long short fund would trade stocks. That's what you should think about this, is trading the liquid funds. Our next fund's the ICO fund. It invests in these tokens prior to them going public. And it's kind of like in the equities market, everybody wants, Goldman Sachs or Morgan Stanley to do their IPO. There's a very few reputable firms in the space, so they really want firms like Pantera to underwrite or to invest in their project before they go public. So we're allowed to buy things at deep discounts to where they'll ultimately come out. And then the last one is Pantera Bitcoin Fund. And I know it sounds silly to have a fund that just owns one thing, but in 2013, when we launched it, there were no funds in the world that invested in cryptocurrency, and there still are no ETFs. So, I think maybe with the new SEC chair, we might have a change, but this is, I think, the most efficient way for people to get exposure to Bitcoin. Investors come in and out at mid-market at the value weighted average price for the day. And it is exactly like every other hedge fund in your portfolio. We got Ernst & Young to do the first audit of any crypto thing in the world. It's all the same lawyers and everything you'd see in a hedge fund, but it has the benefit of daily liquidity. So you can come in on any US banking day and then come back out, on any banking day. There's no lockups. You can come in for one day and come out the next day if you want to. And it's much more efficient than all the competitors in the space, and definitely cheaper than doing the bid offer spreads and paying, for your own purchase of cryptocurrency on, say, Kraken or Coinbase or Bitstamp. And with that, I wanted to just open it up and answer the questions that Marty would like me to answer. Or I could do it through the chat box, whichever you think's good.
Hey Dan, I just published the poll results. And it seems like most of the people want to hear about, what are the biggest challenges for Bitcoin in 2021, and what are the repercussions of this XRP SEC investigation?
Yeah, so the biggest challenge historically has been regulation, and that ties into your second question. In the U.S., most of the agencies ruled very early and very well, I would say. The IRS ruled in 2013 that cryptocurrency is property. So if you hold it for more than a year, you get capital gains tax treatment, which is very different actually than gold, which is taxed as a collectible. And currency is always ordinary income. You could buy the euro 20 years ago and sell it at a profit today. You have to pay ordinary income on that. So most of the agencies have done a great job and done a very early job, like the CFTC. In 2013, one of their commissioners came out to my house in California and went to our first conference to talk about crypto, and then they've had futures since 2017, so they're great. The SEC is in kind of a tricky spot, I'll admit. They're trying to see whether projects like Ripple are similar to or dissimilar to an orange grove in the 1930s, which is the Howey test that determines whether something's a security or not. I wouldn't want that job. It sounds like a really hard thing to do. So the regulatory thing is kind of the last remaining issue. It's not a very, I wouldn't say it's a huge issue in most countries and in most regulatory bodies. It's been settled. And then the big thing for 2021 is central bank stablecoins and Facebook's project. So 2 years ago, Facebook announced they were going to do a stable coin, a cryptocurrency token that's basically backed by US dollars. It's a great idea. They're going to bring 2.4 billion people into the kind of online commerce world. Not coincidentally, 2 days later, the Chinese announced their own version of Facebook's cryptocurrency. And now every central bank on earth has a central bank digital currency project. The US Fed has assigned that to the Boston Fed. They're working with MIT to do it. So that is coming out. The question on Ripple, we're one of the original seed investors in Ripple, and it's a really interesting, important project. But there again, it's a tricky case that the SEC has to decide whether, this really, really amazing new technology called Ripple and XRP, their currency, is like an orange grove in the 1930s or not. And, we're just going to have to see how that plays out. Obviously, in a lot of these cases, the SEC and the projects settle and kind of decide whether it is a security or is not a security. And I don't have any particular insight which way that's going to go. But, over the next 18 months, that'll probably get sorted out. But again, I think those are kind of edge cases that are pretty rare and not really common. Bitcoin and Ethereum have already been deemed to not be securities by the SEC. And so they're essentially kind of doing their own thing already.
Right. So we've been getting questions. We've been getting questions.
Oh, there was a...
Okay,
go ahead.
So we've been getting questions from an anonymous questioner all day long. And I know it's not Gary Saka because Gary's logged in, but it's why are central banks allowing Bitcoin to flourish? Isn't it a threat to US dollar primary reserve currency status?
Yeah, so it's a really kind of intuitive feeling that people have. And I had that when I first was trying to get my head around Bitcoin is, government's going to hate it. The reality is they really actually love it. And the only small exception would be there are just a couple countries, the US being one of them, that actually have some sovereignty. They make money by printing pieces of paper and handing them to Russians to use as like IOU certificates, right? But with rates at zero, that's actually has no value either, right? So the value of printing money and having it be used as a zero coupon debt instrument isn't that big a deal. And the US is really essentially one of the only countries that gets that value. And even in 2013, I talked to the director of research at the Fed, Jamie McAndrews, and he was like, hey, we're laissez-faire. We don't care either way. So, but the reason governments love cryptocurrency, Bitcoin in particular, is the opposite of kind of what the press would want you to believe, that, oh, criminals use it, it's so great, the Silk Road, all that stuff. It's terrible. There's a permanent paper trail of every transaction that's ever happened, published every 10 minutes publicly. And so if you're doing illegal activity like buying drugs on the Silk Road, there's a permanent paper trail of all those trades. And so the Silk Road guys in jail, there were 2 US federal agents that were on the Silk Road task force that went rogue, and they were extorting money from the Silk Road guy. And I was the chairman of the largest exchange in Europe at the time. And they were laundering money on our exchange. And so we turned one guy into another agent, and that agent quit that day. And I'm like, that's not a good sign. So we turned both of them into a third agent, and those 2 agents are in prison doing 10 years for their crimes. So punchline is governments love crypto because it's permanent paper trail, whereas cash is terrible. Criminals use cash very well. So, and the other side would be if, say, a country like Brazil, which has a huge, quote, gray market or, non-formal economy, were operating on a cryptocurrency like Bitcoin, they would be able to tax everyone fairly. So you'd have a much lower tax rate. Everybody pays it. The society would work a lot better. So the governments, sometimes bureaucrats are slow to get their head around things, but they are generally very positive about Bitcoin.
Great. There was another question. So you actually have a chart showing, gold's rise versus all the cryptos. Why, there's traditional hedges, which are gold and other sorts of metals. Why is Bitcoin and the others surpassing them with such great, volume or amount?
Yeah, gold's been awesome for 5,000 years, so it's not going away. But this is the new gold. And we actually helped put together a book by Nathaniel Popper of the New York Times called Digital Gold. And, that's a good way to think about Bitcoin. It's a digital version of gold. It does everything gold does, but you essentially can keep your entire net worth as a password in your head if you want. And for those of us that live in a developed country with, real banks and government's always bailing banks out and all that stuff, that doesn't sound that important. But if you live in, India or China or, most of the 200 countries on earth that have terrible banking systems and terrible confiscations of wealth from the private savers all the time, storing your wealth on your cell phone or as a password in your head's a good thing. So gold's not going away, but if we look back 20 years from now, I think you're going to find every central bank has some Bitcoin on their balance sheet and not everyone has some gold.
So the other question I had was what happens, and we'll get to the other question, what happens if other companies are like and you already pointed out that Morgan Stanley has bought pieces of Microstrategy, et cetera. What happens if other companies want to do what Microstrategy is doing? I mean, it seems like it's almost a fiduciary duty that if you're a cash management aspect of a bank, of any corporation, and you have large cash holdings, and you know that the dollar value is going to decline because of printing, why wouldn't you look at crypto as a fiduciary duty, right? I mean, so what happens if other people bandwagon onto that? I'm saying that's my question.
Yeah, so Marty, you're spot on. Is if you're a fiduciary and you're trying to manage a cash balance, you might want to be like Square and they put 1% of their assets in Bitcoin. Some number like that, I think's prudent, right? Like, but companies like MicroStrategy, kind of took it to the next level. They're now issuing debt solely to buy more Bitcoins that are then easily accessible to people who can trade public equities. And ultimately, MicroStrategy might end up looking like a big ETF, right? So
what's the rate on that? What's their coupon they're paying on that?
I think they're paying some kind of 6% or something coupon on the preferred debt, but it's just a way for them to get $600 million to buy more Bitcoins, and then more people like Morgan Stanley buy their stock and drive their stock up. And the way capitalism works, there's going to be 100 of those within the next 6 months. It's coming quickly. One of our portfolio companies just got bought by a SPAC, and that's kind of that is the first company in the space to go public. And I think you're going to see a dozen of those happen over the next year.
Interesting. Other questions are coming in from the audience. What portion estimated of people have lost their crypto passwords?
Oh, it's a great question. Is Nathaniel Popper, the guy I was just talking about, the author of Digital Gold, he just wrote an article about the CTO of Ripple who forgot his password to, I think it's $200 million worth of Bitcoin. So that's a very strange problem. And the punchline is 99% of people are more than happy to have Coinbase or Bitstamp or somebody store their password for them. And if they forget their password, reset their password. But, libertarians, decentralized, passionate people want to store it on their own hard drive and want to be outside of government control or whatever. And it's literally 20% of Bitcoins. And obviously, almost all that was early days. There was an article by the S in RSA Security in 2013 that estimated 13% were lost at that point. So, at that point, it was like a science project. People would just have them on their hard drives and they kind of forget that they had. And, back then, people were buying pizzas for 10,000 Bitcoin, right? People weren't focused on the future value of it. So I think about 20% is gone. And, that makes the remaining 80% more valuable because there's less to go around when 100 million people want to buy in.
Great. A couple other questions. Bitcoin hoarding, 2 to 5% of people own 90% of the total volume of Bitcoin. Small
yeah.
number.
So, people talk about that, and including the Satoshi Nakamoto, who created Bitcoin, owns 10% of Bitcoins. Has never done anything with it, never moved them, doesn't use them. But it's kind of like Google still works fine, even though Sergey Brin owns a lot of the stock. Like I don't really care. So Bitcoin still does what you want it to do, even if it's not equitably distributed across the 7 billion people on Earth. So it's an issue. It'd be kind of nicer if more people were excited about this 10 years ago, and there was a billion people each with the exactly the same amount. But it doesn't negate the benefits of it.
Any thoughts about like the speculation component of this?
Oh yeah, so sometimes people say, oh, Bitcoin's a failure. There's no killer use case, killer app. I've always half jokingly said, well, Bitcoin's the killer app of Bitcoin, and Bitcoin just passed when we first did our first conference in 2013, the value of all the Bitcoins on Earth, I compared it to a public company that had the same market cap, Urban Outfitters. And then earlier this year in our investor letter, I updated that, and it was the same as L'Oreal, the cosmetics company. It just passed Facebook, so with 100 million people using it, and they're all using it for really different reasons. Some people are using it to move money across borders. Migrants do that. It's doing 7% of all the US to Mexico remittance already. So, there's a lot of people using it for that. But, we're speculators, and I say that with pride, right? Like we're trying to make money for our limited partners, and so I think Bitcoin's going to be worth a lot more in a few years than it is today. So speculation is not a bad use case. It's something people do prior to using it as a kind of day-to-day currency, and that'll happen in 10 or 20 years. Right now, people don't want to spend it because the pizza question that people are calculating in the chat box is nobody wants to spend their Bitcoin on a pizza because a couple years from now you could buy a house with that amount of money.
Absolutely. Well, listen, Dan, any parting thoughts you want to leave our group with in terms of Bitcoin in this next year coming up?
Yeah, I think that the way to think about it is I grew up on Wall Street in the 80s, and commodities weren't an asset class, and then Goldman made the commodity index and it became an asset class, and then emerging markets became an asset class. And so I feel like I've seen this movie a couple of times before. Bitcoin's getting there. We have a lot of endowments that are investors and are interested, but it's still not really an asset class yet. But I think in a decade it will be. And so, having 2-3% of your portfolio in crypto, it just seems like the prudent thing to do. And yeah, it could go to zero maybe, but it might keep going up at the 213% compound annual growth rate. And those assets don't come around. They come around basically once a generation.
Absolutely. Well, listen, Dan, thank you so much. I really appreciate it. And great job. We're looking forward to hearing from you more in the future. So thanks so much.
Marty, thanks. Great seeing you again.